Hi guys, welcome back to Working Dad Trader. Thanks for watching. In this video, I thought it'd be a great idea to break down how I basically look at a stock, how I examine it, how I assess the stock, and show you the sort of principles I go through. In this instance, we've used Amazon, and I shall show you a run through of how I look at Amazon and how I assess if it's a buy or not. Okay, so if we use my Trading 212 app to basically walk through how I personally look at a stock, how I personally examine a stock, sort of the things I look for, and then decide whether I feel that the stock's worth buying or not. Again, these are just my own personal opinions. I'm still a beginner in the stock market. I'm not a financial advisor. Just my basic opinions. Please don't use what I say as gospel. Please always get advice or do your own research into stocks yourself, because it's your hard money that you're going to be putting into a stock at the end of the day, and it's your responsibility just to make sure that you're happy with the risk that's involved. Okay, so some of the things that I look for personally, I've just going to use two random stocks. There's no way me saying that you should consider buying them. Just to talk through how I look at it. So if we click on Amazon, which everyone knows sort of Amazon, a big company, and what I look for, if we go down through the screen on Trading 212, and we get down to the full income statement. So I look at the full income statement, and I look at, if Trading 212, it only does give you the last 3 years of figures. You can use other provider information like Yahoo Finance, which will give you a bit more. I think they give you 5 years if you want more data to look back on. But in general, I just look at total revenue over the last 3 years. Has it been growing? So if we go back to 2017, it was 178 billion. 2018, it's then gone up to 200 and pretty much 233 billion. And 2019, which was the last financial year, which is 280 billion. So you can see in the last 3 years the projection of their revenue that Amazon are bringing in is definitely going up. So that, in my own personal checklist, ticks a box for me on one of the checks that I like to see. You can also go onto the quarterly and just have a look over the last few quarters as well. So if we go back on that one, you can see back in quarter 4 of 2019 it was 87 billion, and if we look in 2020 quarter 2 it was 88 billion and 96 billion, which is I think their biggest quarter of all time. So you can see that Amazon is definitely going up as far as the revenue that they're taking, which is a good thing in my book. Then if we look at, go back to annually, if we go back, I like to look at the net income, so that's after taking out all the different expenses and what the company is left with. So the net income is down here, so I like to look at, is that also growing in the same way? So if we look at Amazon's net income in 2017, it was just over £3 billion. 2018, it's now jumped up to 10 billion. and 2019 it is £11.5 billion. So again, same as the total revenue, it's going up, which is a good thing. It means the company's doing well, and that's the type of things that I personally like to see. So that's another tick on the box for me. That makes me think that's a good company to invest in. Then I like to go and look at the balance sheet. So we click down and click on the balance sheet, and I like to look at the cash and cash equivalents, which is this column. And I like to look at, this is the cash that they've got sort of left spare around from that they can use to put on anything they wish to. And as you can see, in 2017 they had 20.5 billion in cash and cash equivalents. 2018 it's now jumped up to 31.7 billion, and 2019 it's gone down a little bit, down to 36 billion, but it's still, they've got a lot of cash pile building up, and which is a good thing. I like to see a good healthy cash pile within a company, which is excellent. So that's still a good tick box for me. I also like to look at the company's current liabilities. So at the minute they have 87.8 billion of current liabilities, and they had cash spare of 36 billion. So they could pretty much almost pay off half their current liabilities in an emergency if they had to, which again is, to me, is a good thing. If we look at, then I like to look at long-term debt, which is in the total liabilities column, and just see how much debt the company has. So this is Amazon, so we're looking at long-term debt is £24.7 billion. It's 2018 was 23.5 billion, and 2019 was 23.4 billion. So they've got some debt, but it's gone down a little bit, and it's been pretty stable those last 2 years. But bear in mind they also have that massive cash pile on hand as well. So to me, when I'm looking at these numbers, it just ticks boxes that the debt that a company has is under control, and it's not going to get itself into financial difficulty. They've got a massive cash pile. The revenue and net growth is going the right way, which is really good. This is the type of the things that I like to tick on a checklist when I'm looking at a company. I also like to look at, and we're looking at debt, and we go back to the ratios, which is here. This is this button. And you click on the ratios, and this can give you a little bit more information as well. And I like to look at financial strength. And again, you can check on, I like to look at, is the current ratio good, which is current assets divided by the current liabilities. And as you see in Amazon's numbers are 1.1, which is pretty good. I think you always look for something definitely above 1, around the 1.1, 1.2. It just means that they've got enough current assets to cover their current liabilities if need to, which again is good. So that's how I look at some of the numbers to do with Amazon. Obviously, it's a company that's growing really fast. And the other thing I like to look at also is me personally. Then I like to go onto Google when I'm looking at a company, and I would just type in Amazon stock price, which will bring up Amazon, and then I just click on the news feature, and I just like to have a gauge of what the last few articles are about Amazon to see if there's anything that I might have missed. It gives you lots of articles from different companies and news companies. You have to take some of it with a pinch of salt, because a lot of the media will have their own opinions, and lots of different people have different opinions. I wouldn't follow everything the media says, because sometimes they might have a certain bias on a company or a stock. I just look through to see if there's been some major announcement within the company sometimes, or something's happened that I've missed. I take on board some of the different people's opinions, but I like to make up my own opinion. But it's just generally a case I've missed something that's been announced within the company that I was unaware of, that they've just sold a part in a certain part of the company, or there's a merger coming, that type of thing. So that's why I use Google, just to have a look and read some of the articles about the company as well, just to make sure I haven't missed anything before then I go and look at the graphs to have a look at where I think would be a good price to buy. Right, I know I picked just one company to look at, and obviously I picked Amazon, which is a massive company, a company that's doing really well. So it was very basic, but that was sort of the point, and I didn't want the video to go on too long by examining lots and lots of other companies. But by all means, if you've got other companies that you would like me to do a video on, to walk through and examine, please put in the comments below and I can have a look at them. And please, again, can I have a like and subscribe, because it really does help support my channel. Just like I'm a beginner in the stock market, I'm also a beginner on YouTube. Okay, well, thanks for watching, guys, and I hope to see you all again soon. Bye.